This is Just Amazon on Thursday, November 8th, 2018. And we've moved up above the 1747 price. We closed above it yesterday, and it looks like we're staying above it here today. Had a small dip underneath pre-market, and looks like we're bouncing again. So similar to how we bounced off of this line yesterday, we could do the same thing and just continue on to rally today. So the opening candle actually negates that idea. It pushes lower. Now the next line below we got is at 1728. I'm sorry, 1727 and 80 cents. And we actually come right in and bounce nicely off that with a really strong. My mind just stopped working. A really strong candle. It's got long lower wick. It's just a nice buying candle right here at a known level that we got. We bounced off of yesterday, kind of weaved around on it. And then the really next candle is really similar, really small inside, and you actually could have taken this one with a break above and a stop below. We'll take a look at the options a little bit to show that candle setting up. So if you didn't get the low here, you could have actually taken the breakout of this candle with a stop, more aggressive here or more conservative here, and that would have worked also because it just continues on up, rallies up, puts in a high up here at 1779.60, and that's a. I was going to say it's engulfing, but it's not quite engulfing. Slightly higher high, higher low. It does start to pull back a little bit and then puts in another hammer. That's the word. Hammer candle. Wow. Okay, that took a couple minutes. Hammer candles here, hammer candle here, and makes a new high and continues a little bit higher and then comes right back down. So we put in a high here of 1784. We're about 20% up from the low that we put in just a week and a half ago, whatever it was. 20%. That's a really quick recovery over the last like 10 days or whatever. Not to say 20% is enough, but I don't remember when I've got the next line up here. I think it's somewhere in the 1800s, and we've got some selling coming in here. There's people who are up quite a bit. They're profitable, and we've got just some selling. So we haven't touched the 21. Anywhere in here, you would have had some really nice moves up, places to get out, even to reload, get in, and get out again. And we got a little bit of a lower high. This has a similar move to what it's done, where it's got an inside bearish candle, then it broke out. This time it doesn't break out. It starts to break down. This is starting to look like a little bit of a head and shoulders, and pulls back a little more. The other thing I do like about this is there's a pretty distinct level here. You can either draw it up like this, and you've broken through it here, so you have some higher lows and lower highs, or you could see this as a bit of a neckline that's a little more horizontal and some lower highs. Either way you look at it, this is a consolidation here, and it's looking a little more bearish. You got your momentum that's just fallen out of this thing. And sorry if that's not clear on the chart. There we go. So you got a squeeze forming, bearish. Your momentum is your bullish momentum has waned, and it really could come back down to this line pretty easily. That'd be a decent move still. That's almost 20 points or so, and more stair step, and it starts to kind of roll. The squeeze forms and fires bearish. You're taking out some of these lows. Again, really small candle in here. If you weren't shorting way up here, which there's not a line to do it, maybe here with, if you're shorting off of that level here. But we'll see what we could have done. This was really nice. Even though it's the squeeze fired, it actually put in a really nice rising 3 pattern and then broke down again here. And this would have been a really nice place to get in and to take the trade bearish. It does actually move down, chops around, but it does end up coming all the way back down right to 1747.09, 9 cents away from the line. And that would have been a great place to be taking some bearish profits, and I would be buying there, and that actually would have worked. What's crazy is I don't know what happened, but this plummeted and then completely recovered. So I don't know if there was some news. I don't even know what happened. But this trade, you pretty much could have repeated right here on the option. It's really close. Had you gotten in and out somewhere and then gotten in again, or maybe didn't get filled, if it moved too quickly, and then it would have filled here, which is just crazy that kind of thing happened. Moved on up very quickly, came right back into that neckline area. And after that kind of volatility, I would just say stay away from this thing, because then it just got some really large candles, moved back down, took out the low, not the low of the day, just the low of these. Something's going on here. This is kind of another double top sort of thing with like a neckline retest, something. It just got really crazy from there. Some really large candles, got really choppy. Like I said, I don't really know what happened on the day. I'm sure there's some news story, something that got released right in here. I don't know, but right at 1 o'clock, I don't know if the Fed did something. They usually do that Wednesdays at 1. Today was Thursday. So I don't know. I'm not sure what caused that. But there were opportunities to trade regardless of this move throughout the day today. So if we just zoom in on the day, and let's go look at the calls at early in the morning, 8:35, 8:40. Look at this hammer at 9:15. And then we'll look here at 12:30, 12:35, what we could have done here. And then at 1 o'clock, some of the buying could have done. And then we'll look at some puts and see, could you have done something in here? Is this one sideways? Could you have gotten some puts in here, by 11:30? Would that have been a good trade? So let's go take a look at the calls first. Now, this is that hammer candle. It had a range of $2, but the next candle had a range of $60 or 60 cents. So you could have taken this above, like getting in at maybe 650 and your stop at 550, and that would have worked. That would have been $100. You could have taken some profits right at the open high, and that would have been, what did I say, 650 to 980. That's more than 3R. Or you could have just held on and been like, whoa, I need to lock in some gains because that just moved way more than I expected. It went from 650 up to 1650 in just a matter of minutes, and then continue on up. So you could have easily gotten 10R in that kind of move. Here's this next hammer. This one had a little wider range, about $2. It would have been harder to set up a trade, to like this one was, because it didn't have a nice consolidating candle after it. But you still could have been buying, maybe go to the next strike out, maybe go to the 1800 strike and see if you can get a smaller hammer candle on this one. And then at 12:30, we're way down here. We had pulled back, and we were looking to bounce off of the 1747 price. The range on this candle could have bracketed. This was only a 70-cent candle. You could have been getting in at, like, this candle was at 840 by 740, and that would have worked here. And it's kind of crazy that this went sideways for 2 candles or 2 5-minute periods. These aren't really even candles. These are just single levels because there was only one contract traded. But had you bought at 840 and a stop at 740, that would have moved up. You would have more than a few R's, 4 or 5 R's on that kind of a move. I guess 4, yeah. Then it came back down, and the 840 price would have worked again. 840 by 740 would have worked here, would have worked here. And this one actually moved a little bit higher. So both of those times you could have gotten 3, 4, 5R, 6R, something like that, from 840 up to 1540. That's 7R. So that was about it on the bullish side. That was off of clear levels or off of some nice candles. So this would have been what? We'll call that one 10, and let's just call this one, let's just say we didn't even get that one. So that one's 10, and this one is 4, and this one's 5, you know. All right, maybe this one's 6. That would have been 20R. 20R across 3 different trades on the day. Maybe you got more than 10 here. I don't know. And then at the puts, so we're looking at the 1130 range. So between 11 and 1130, these candles made some pretty tight ranges in here. This one was more than a dollar, but you could have been bracketing like this candle here, right at 1125, getting in at maybe 1150 by 1050, something like that. It would have filled here at 1141. It didn't even come down into the 10 range again. And that would have worked. You know, you could have just held that until it got into the 1747 price. So that was getting in at 1150 and exiting at that price. So let's say you got out at 1850. All right, 1750. I'm in the middle. 1750 minus 1150, that would have been another 6R on that kind of move. So just waiting for the right setup, waiting for something to happen that just consolidates, looks like it's got something setting up. Like look at these lower highs and then look at the relative lows through here and then seeing that breakdown. And then even these, like you got it set up on this, but you would have gotten filled here, a retest of that. You could have waited for the breakdown, waited for the retest, and had a trade in place. You don't even have to be the one getting in, right on the breakdown. You can wait. And that's probably one of the things I've learned the most out of doing this is waiting for the setup I like, waiting for it to come back into a line like this, waiting for a bounce like this. Even on this sort of a huge candle, the 1775 strike was way, way, way up here, and it still got there. And usually when the out of the money strike has gotten into the money, that's another good time to take some profits or just get out and run. You can either lock in it all, lock in some, because we didn't really get that much further into the money. We ended up getting into the 1775 strike and then not getting any further, really. The high we made was 1784. Let's go look real quick at the 1800 call and see if that would have worked better for this candle at 9:15. So the 1800 call, this is what I usually do when I'm setting these up. I'm looking at how the option traded on the day. There we go. I'm going to turn off the theoretical price because it's really annoying to look at. And it's just better to watch these during the day and learn them yourself. So the 1800 call, the range here was 250. The range here was 1. The range here was 45. So you could have gotten 2 of these here. That would have been amazing. But anyway, had you gotten in on a break above the 270 price, like 3 by 2, that would have worked. This candle is pretty wide still. That would have been really hard to do. The range on that is almost $2. So I'm not sure if that would have worked. And then down here, when it came down to touch 1775, the range on this candle was 60 cents. The next couple of candles, it didn't really get going too quickly. So you could have still been buying like 350 by 250. And that trade would have worked here and again here, just like it did on the 1775 strike. So that's pretty cool. Could have been getting in 350 by 250 and a strike or a target up at 550. That should have filled on this candle. Or had you missed that trade somehow and wanted it to pull back into 350, you could have gotten 350 by 250 here, and you would have hit your target of 550 here. And that would have been 2R, just 2R. Within 5 minutes, within 2 candles here. That's pretty cool for that kind of thing to work out. So just being patient, waiting for those lines, or waiting for the stock to move into those lines, and just being ready to pull the trigger. Sometimes that's the hard thing to do too. So I hope this is helping. This is something that you're recognizing these opportunities and making sense of looking at the chart. So yeah, hope this made sense. This is Justin AMZN. Thanks.